Yeah, there we go. Cool. All right. So I want to go over a couple things. Just for one, I want to talk about Friday for those of you who did not do well on Fridays. I, for one, didn't do well because these are one of the days that actually go against me all the time. And these are what I call momentum days. These are my best days, like right here. These chop days, I can ride these all day long because I can map out levels, I can get in, I can get out. And these are usually the best ones that I do the call outs. As you can kind of see, like recapping, this was a Thursday. We had like some data. I think it was a CPI data. It dropped down, came up, formed a pendant. I drew out a midline. And then I wrote, charted out a bunch of different levels to see where it reacted. I think we wrote a few things, made a little bit of money on that one. I think that was an overall good day. These are by far my best days. These are my worst days. And I think these are probably bad days for a lot of other people too, specifically for these reasons here. One, let's recap. We had a huge sell-off pre-market. So one, you already got everybody, nice FOMO'd up, wanting to jump in because of course everybody's anticipating the market to pull back and it to, just completely correct. So everybody, of course, wants to get in as soon as they can and ride this thing down. And one, you kind of have to go in with that mindset of being aware that's where your feelings are. I actually kind of pointed out to the Discord a little bit that, look, it really needs to break through a few different levels before you actually jump in this and assume it to go down. I had actually charted this one out before in a couple different levels, seeing that we really needed to break the high of a couple days previous for it to actually continue. And even if you look on the hourly, like even though it had sold off, we still hadn't broken the 45 moving average. And these are the moving averages that I have, the 9, the 21, and 45. When it breaks this 45 and it holds, that means momentum is completely shifted. You can kind of see examples here from previous ones where it actually broke and it crossed, and then this thing completely rode all the way down. So that's kind of what I use. So being that it only broke the 9 and the 21, and then it tried to retest, and that's why I said you could eyeball some puts, but I said, look, it could easily rebound here. And I was kind of pointing that out. I was on the road that day, so that's kind of why I wasn't extremely focused. Now, as you can see, even if you just have some basic charting, let's go back to 15. You draw out a nice, high right here, seeing that it actually needs to break below that. And then you can kind of see one, it consolidated a little here. 2, Thursday, it actually hit and bounced. And then Friday, it hit it and retested and bounced up. So you could have easily seen that, look, this thing is not ready to completely turn over. And then also on the 15, you have this 200 moving day average. Even on the 15, it actually broke all your EMAs, but it bounced right off the 200 moving average. So just a quick recap on 5, 15s and hourlies. The way that I like to look at them is big moves on 5 and 15s. That's going to be like, $1, $2 to $5 type moves. But if it breaks it on the hourly, then you're going to get much larger moves down. So if this actually corrects and breaks down, you're probably going to get like an $8 or a $10 move. Whereas if this thing breaks on the daily, you can see these are going to be much bigger drops and not, tinier ones. As you see, these are much larger momentum moves. Same thing with the 4 hours. If you look at a 4 hour, when you actually cross here, see how we're constantly riding up. We haven't barely even broke, any kind of momentum play on the 4 hour when it comes to our upward momentum. Now we're getting close to a range right here, which I'm going to talk about in a minute. But this is where the difference of these timelines kind of come into play. So when you look at the small perspective, yeah, you might be falling and people think, oh, the whole market's going to crash. That's just micro in compared to, the big picture of things. So I really want you to remember that before you go long on something, because as you see right here on the daily, you still have a nice cross. You got a stochastic cross. Kevin likes to use these too. We had upward momentum, and the momentum has not even started to even fade down. Now it's at the very top, And this is what likely will occur is it'll ride up, curl over, and then dip back. So you'll probably kind of ride up here, curl over, and then dip back, and then possibly continue up, break, or continue down. So that's what you want to kind of look over the next, the remaining of the month into February. But when you see a big move, don't just immediately think the whole market is dumping. You need to scale back out a little bit and see where the overall market is. So before I continue on the next thing, does that kind of make sense? Any questions on that? Comments, concerns? Yes, no? Okay, cool. All right, so what I'm going to kind of talk about is mindset with a lot of stuff. A lot of people really try and use these pre-market days to figure out direction, especially when you chart things out. You immediately want to make a good call, get in, you want to go in calls, or you want to go in puts. And usually what I do is I try and sit back and I watch and see what it immediately tries to do, how it reacts to certain levels, and then, where it could potentially bounce. Now, being that this one, it fell down, it kind of curled up a little bit, hit this, and it immediately started to form a nice support. And the things that you could have easily done is right here. As soon as it opened, it hit a resistance and pushed back, and then it consolidated a little bit and it faded, and it did not fall hard. It continued to form a support. And that's something that you really need to pay attention to in deciding a direction, whether that's up or whether it's down. This is forming a support right here, and then this immediately formed a support right below it. And that shows you that this is kind of like an indecision point. And once it breaks past this support, you know that you're going to get some upward volatility and push and momentum. And once it actually broke, you had a decent sized candle that pushed up 400,000 right here. You can see the volume, 400,000. And then it tested. So it retested right here. And then it continued up, and then it retested again. And then this one was just a nice continuation up. And if you look on the 1 minute, you could have easily stayed in this because it stayed right on top of the 9 and the 21 moving average right here. It just cruised all the way up. And then right here is where you could have exited your first position once you see that the momentum is kind of shaking. Usually this means there's going to be like maybe one more push up to retest the top, and then it'll kind of cross over. So here's to help you to see, and I was actually going to call out some, recommend people to get in calls right when I see that this could not break, and simply because of this. All right, let's go back. So this is where this pendant formed on the previous CPI data release. It bounced and consolidated. And what I like to draw out are what's called midlines. So essentially that's where the indecision points are. So it's saying that if it continues up, then it's saying this is upward momentum. If it continues down, that's a downward momentum. But there's your nice midline. And this thing actually retested multiple times throughout the day. It sold off, bounced right back on top. It even tried to retest here, didn't get all the way down. But guess what happened? See, when you sold off, you could have noticed, oh, look, there was some slight consolidation, sold, retested right here. And then once it tried to break and it could not break that midline, then you could have easily got in calls comfortably, knowing that this midline was solid and that you were going to have upward or continued momentum. Then if you were on the 5, you could see that, look, it was retesting the 45-day also, which confirms, direction change. So you had a lot of reasons for it to continue upwards on Friday. Any questions, any input on that y'all saw that I might not have, any comments on it? Yes, no, maybe. Is anyone muted? Can anyone chat? I don't want to have y'all shot down. Okay, good explanation. All right, I just want to, also, is this making sense? Yeah, give me a test. Is this making sense? Is what I'm saying kind of, not making any sense at all? Okay, cool. I just want to make sure that we're all on the same page and I'm not just sitting here saying stuff that's kind of wasting y'all's time. How do I figure out a good midpoint? Okay, so look, so what I was doing is I like to use the 1 minute only because you can see how the volatility acts and reacts. And so let's just pretend this was drawn out. And this is a nice pendant formation. So once I saw that this had a low, then it had a high, and then it was getting tighter and tighter. So what you can do is you can draw a midline just right there in between. Or let's just find another pattern. Let's find something. Let's, usually bull flags, bear flags are good. Pendants are good as far as a midline goes. Let's see if I can find one. Okay, so maybe here's a decent one. Okay, so say for instance, if this is a nice bear flag, all right, you got to push down and then let's zoom out. You see the flag right here? You can kind of push and then you kind of push right here. Hold on just a sec. And then you have this nice little bear flag. So you have this push down and then it hits a bottom and then it starts to consolidate, but it slowly rises. So a midline, what I would do is I would sit here and I would chart out right there in between those. And normally, see, once I draw that out, let's go back to the 1 minute. What day is this? This is 12/13. Let me see. Sometimes this will exit off. Okay, let's go all the way back. So what will happen on the midline is your price action will dip below and then it will retest. And then once it hits that midline, it will give you direction. So in this instance, what happened, once we get back all the way over here, I want to show you on the 1 minute because it shows you volatility. All right. So we push down and we consolidate it up slightly. So this would be your midline. See how it's chopping. And then once it actually pushed down and then it tried to push back up one more time, it actually rejected. And then that's where it curled over. But see, this time it was ready to go up, but it pushed through the midline and then it retested the top of your actual pattern and then it pushed down. Now, if this pattern was going to be invalid, what would happen is this would have tested the top of the pattern, pulled down to this midline and then bounced up and broke. And then you would have known that that was going to be a reversal. That's happened many a times before. So in this instance, see how it pushed up and it broke down and did this nice zigzag pattern. This basically played out exactly how it should. Now, here's another thing, and Kevin talks about this a lot too. So say, for instance, if you have a top of a pattern and you're right here at 409.5, you pushed all the way down to 401, let's just say a rough estimate, a $9 move. So then you get the flag. More than likely your move when this pattern breaks, it's going to be likely to be a $9 move. So this is how you can set your price targets. So when this goes down and then this would be the top of your pattern, you could even take this and look at there. That's very similar to the entire length that this thing is going to flush. So this can help you with projecting if this is a true bear pattern and it breaks, you're going to have another leg down all the way. Maybe a little less because, of course, the momentum is not going to be as strong as the top one, but you are going to get a very similar move down. Now, another thing I like to do, and let's see if this plays true. See, this one was a volatile day. You had a lot of movement because SPY normally only moves like, $5 a day. But I normally like to chart out these little $2 moves, and you can sit here and you can go and you can see where the movement is. See how you had a top right here and then you had a consolidation, nice little range, and then it broke. Look, see, you had a top right here, nice consolidation, little range, and then it broke. And if we had a top, see where another consolidation that wanted to be another range, but it continued pushing down into yet again another one. Usually you only probably have 1 to 2 movements of a $2 variance throughout the day. So be aware of that when it comes to SPY. But this one was a very, very volatile day. And I think this is because this was actually like a CPI data or something where it had a huge run up and then remember it just sold off and flushed all day. That's why you had a big sell off there. But does that kind of make sense with the midline when it comes to explaining that? Awesome. Understood. Anyone else? Yes, no. Does that make sense on that? Let me see if I can find like another pattern. Okay, cool. And this, again, this is just totally how I chart and how I use things. And I only use this based upon how I've traded and, reactions I've kind of seen in the past. All right, let's go back to like some bigger volatile movements and I'll okay, here's a perfect example right here. You see this nice big flag, and this is on the hourly chart. So of course it's going to be much larger. So this was, the low of the market, 349, we bounced, and then this was a huge run up. So you could have charted, this is what, 356, and then you have a high of 373. So more than likely you're going to get a $20 move. So if you have a flag, it's going to push all the way down. Look at there. So 360. So anticipating $20 move, we're going to go to 380. And guess where it runs all the way up to? About the 380 mark. So this is how you can use these patterns to see how long you need to hold your positions. And even on this midline, this is where I was sitting here charting it out. You see a potential midline right here. See how it's bouncing, rejecting, and then it pushes, then it comes back. In this instance, it hit it. If this move would have been a downward move, it would have stopped here, rejected, and broken down. But it continued up, and then it broke out of the pattern, which confirmed it was a bull flag, and then it continued to rally. Is that going to make sense on that? Yes, no? Cool. All right. And these are pretty much the only patterns I really use that make the most sense. Let's see here. I would say a range and then channels, bull flag, bear flag, and pendants. Those are the ones like this whole, cup and handle, head and shoulders, all that shit. It's like, I don't follow any of that stuff because I'm not going to be sitting there looking for specific patterns and then anticipate it to do something, because that doesn't necessarily mean it's going to do what you think it's going to do. So I just look at the ones that I know actually kind of play out. And as you see right here, I'm on the 4 hour, and this is an upward channel that we're currently in. So if you look back on the daily, you see that we have these channels. This is a channel that pushed up, fell down, pushed up, fell down, pushed up, fell down, didn't break yet, but it's pushing back in this channel. Now, most of the time, what's going to happen is you usually have about 3 to 4 channels in a move. So let me chart out and try and match this. So what I'll do, and this is how I'll sit here and chart these channels. So I'm going to turn these different colors. All right, I'll turn these solid. And then you're going to kind of see how you can anticipate where to get in and where to get out. All right, so I'm going to move this. And where do you think I should move it? Probably right here. And here's the reason why. See how this is the top? See how when you actually fell in, it consolidated, then it broke down and it retested, pushed down, continued up, retested. Now what happened is this move, it pushed it past the channel, and then it retested the top, consolidated, pushed up, retested, pushed up again, broke below, broke back up, and then it fell down. So then if I sit here and take, where's my other little channel I just drew out? Let's take this one. This could have easily been the top of this one. You see how see it falls in, tops, retest, retest. So now you have all these lines and all these channels that are actually forming in one another. And these are all, if you really want to play into it, zoom out, and what does this look like? One potential giant bear flag. You're going down, and then you're sitting there chopping, and this could potentially be your midline. You see how you go down, you go up, you go down, and then you go up. If this rejects here, then that means this is confirmation for a bear flag, and then it's going to drop. And then guess how much it's going to drop? Let's see if you're up here at 420, and then you have a low of 350. So that's 5, 4, 3. What is that? Like a $70 move? I don't know. My math could be off on that. Yeah, let's just say 70. So let's just say if you're at the top here, and then you take a $70 move, that's going to dump you down to 330, which then, if you actually chart this out nicely, guess where this is going to go? So if you take this and you dump this down, what does that look like? A nice continuation for this continued downward channel. See how you can chart all this stuff out and anticipate where everything is actually going to move? Does that make sense? Big picture stuff. Yeah, that's some good shit right there. All right, and this is how I look at stuff right here. So you can basically use these things. I mean, it's only scary if you don't anticipate it. But if you can anticipate it, then you can sit there and make money on it. So let me go back to your initial, what was it? Yeah, it makes sense. On what time frame do you enter trade? All right, for scalps, for quick little scalps, you're going to want to enter on, like I enter, you know, like in 1 minute time frames, because I can see the volatility. I can see when it hits a level and how it reacts. That's why I like it. But you can also see those on the 5 minute and the 15 minute. It just doesn't move as much, but I like to see how full the candle is and how volatile it is. That's what I like to trade on, because I could easily enter a move and then I can zoom out and look at the 5 and the 15. My moves, they're quick. They're not going to be holding it for hours. I'm going to be holding it for 5-10 minutes max. So if you want to scalp, you can do it on the 1 and 5 minute. But if you want to get in a move and you want to hold it for an hour or two, then you want to be looking at, you know, the 5 and 10 minute time frame. And then you want to be looking and anticipating and holding it larger. So, or longer. Say, for instance, if you knew this faded off and then it dropped and hit this moving average, and then you look back and say, well, we can either come all the way back up to here to retest the midline. So I'm willing to hold it all the way. And then you can sit back and you can watch it, and then you can rally it up and you can see when there's resistance, and you could have closed it out right there where it pinned. And that would have been an actual good move, because this pin correlates to the bottom side where you had support, and then now it has turned resistance and you could have closed it out. But luckily this sold, built a little support right here, and then rallied up and then found support again and then continued to rally. So that really depends on how long you want to hold your moves. But for me, I hold my moves, you know, pretty quick. So I do the 1 and 5 minute time frame. Nice channels. All right, any other questions on some things that I just kind of said as far as that goes? Yes, no. All right, so I'm going to talk about these channels a little bit, but this is what I'll do in like a big overall move. So as far as the channels go, and you can chart these out like, you know, 4 and 1 minute or 4 and 1 hour. So you can see right here how it fell in, and then you just basically just play it out. You know, I did the same thing right here. See, that might look like chaos to you all, but look, I'm going to take these exact same channels, and then I'm going to move these over and show and find support. So basically, I'm going to take this, bend this one down a little bit. Take this one over here. See how this angle's a little bit different? See, this one's like a more sloping angle, has a little bit more of a bend to it. And I can sit here and chart these out. Let's see, this one looks like a decent channel here. And then you got like a decent channel. That one looks a little sketch. This one looks a little confusing right here. So that kind of flushed. So essentially what you can do, see how it goes down. See, these are really choppy actually. Came down, retested here, pushed up, retested, dumped all the way down. This one should actually be a channel. Probably about right here, because there's the bottom of this one. Then it retested this, bounce, pushed, rejected. And then this is where you could have seen that it had found a midline right there. See how it broke down into here, hit the bottom, hit the top. So your midline is going to be right in the middle, riding up. Bounce. And then normally this pattern would say, oh, it's going to bounce down. But what it did was it found the midline, and then it actually pushed up through. So it pushed up through a higher channel, bounced, pulled back down. Look at the midline here. Let me see if I can extend this out. So we extend it, it broke through, came, and it didn't even reject right there. It rode back to the top of this same channel of this one, and then it rejected and then flushed all the way down. And then that finally rejected. So the same thing, you can just sit here and make channels on these larger scale moves to actually plan and see where things go. They don't just have to sit there and just be like these micro moves. You want to look at these massive channels. And then, all right, let's talk about a range. So this is what I think is going to happen this week. Less volatility. Less volatility in what? Elaborate a little bit on that so I can make sure that I'm on the same page as you. Moves were smaller. Yeah, that one was more choppy. Like, definitely didn't know what way it wanted to go. Okay, so right here, we have a nice little dip. Then this is a strong resistance. We found this should be their 390 range. Yeah, 390 has always been a good level. So you can sit here and chart out the top of that resistance. And you see where this bounces. This would be like something, you know, a lot of people like to use zones. I'll play with those a little bit. So it broke down, retested, pushed up here. Then it found support, broke through, but you see how this is getting tighter and tighter. So it's getting closer and closer. So if this is going to continue, then this means that they were probably just going to go just how this went really high, but this went really, really low, like it stayed tight. Like this one swung really wide and this one swung a little less wide and this one swung even less wide. This means that this one might just swing right up to here and then continue down and then push up, or it might actually flush and break through. We don't know. There's no telling. But what I think is you have a nice range right here. And then we have another range kind of right here. I kind of mapped this one out a little bit. So this is on your, all right. So you kind of have these two ranges. I don't want to delete my other lines. I kind of have them there for a purpose. So I'm sure that you all can kind of see this range that had formed initially before right here, where you pushed in, bounce, 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 and then it actually broke through. Now we come back to retest. Guess where we are? We're right there at the midline again. So this means that it can either continue up to test the top of this pattern, bounce down, retest the midline, or continue up and push into this next channel. Or another range, because you see how this one actually pushed up and broke out and then retested and then it retested again. That's why I have this line drawn here. See, this could be the ultimate push up to the top. And then if you come over here, you can see that this was actually a support prior. See how these actually broke down, bounced off here, bounce right off of here again. These are all potential resistance because these were support once it broke through. And then this would actually be the top of that channel. So you see how this would kind of actually break through, like probably around right here. Yeah, this one's a much wider one. Yeah. All right. So you have these two ranges that you have kind of going on. So right now, if this one pushes up into it, it basically said that, look, it was not strong enough to go into this channel and continue up, so it rejected. Whereas this one, it pushed up, found support, and then continued up. But this one, it pushed up, did not find support, broke back into this channel. So right now we're in this range right here. And we're going to either retest the top of this, again, because we've already kind of broken past the midline. So be prepared. Tomorrow, you're probably going to have a little run up, or if it dumps, let me see here. This is so yellow. I can't even really see it. All right. So if it does dump, you're going to want to pay attention to if it dumps below on the small scale. If it breaks right here, if it breaks this 397 level, then we're going to head down a little bit. And of course, we still might retest this because this is a strong support. Especially if it breaks through here, then you know that there's going to be nice continued downward momentum, but it could easily consolidate right here at the 396 level because this is actually a daily level that I have kind of drawn out right here. So this is a strong support and resistance. So this is one of those nice daily levels that it really could actually bounce off of and continue up. I think futures are actually showing that. Let me double check right here and see what stock futures are showing. I don't really like to use stock futures in the you know, around this time. I really like to see the pre-market. Yeah, because these things are barely down. They're only down by like 0.16%. So it's nothing too crazy. It's not even a volatile move. So I like to wait until pre-market, and then usually the hour before you see, you know, what kind of direction. But look, this 45 could easily continue to extend right here, and this thing could continue to rally and then push up and leg up another one and leg all the way up, and then, you know, touch 400 and then continue up. There's really no reason for it to stop unless it just really decides to. But the likelihood of it continuing up is very small. It's probably going to hit the top, curl over, and then come down. And you really only want to go in longs and puts when you actually see it curling over, this 921 breaking, and then your 45 breaking, much like this. You want to see this crossover of everything, and you see how it broke, then it pushed up to retest, and then it continued down, and you had a nice flush. So let me give you another example of that. That's where you would hold for probably 2 or 3 days, you know, like 1 to 2 days or something like that. See, this was a good example where you had a nice range, and then it finally broke. And then once it did break, and then this is something you're going to see a lot. Once this breaks, and again, you guys, if I'm talking fast, it's literally just because I don't want to waste y'all's time, and I just want to pack this full of as much information as I can. So if you have questions, please drop it in the chat. So this way I'm not like skipping over anything. So you see how it bounced and rode on top of your 45, but once it actually crossed over and broke, it retested to try and push up, and it couldn't even push past your 9 moving average, and then it rejected. These are the best ones to know, that once it breaks down and pushes up and cannot break past that 9, it's more than likely just going to flush. And then this one just fell. See, if you had saw that and you were on the hourly and you're like, all right, I'm going to get in puts, which you could comfortably get in puts, even if it bounced up and down, but you had like a weekly, you could have rode this thing at least swinging it overnight 1 time, and you could have closed out here comfortably. But then, you know, as you see, it continued to sell off for an additional day. Then it started to level out a little bit. And of course, hopefully you would have gotten out here. So as what we want to see, if we're going to be in puts, is we're going to want to see this thing rally up, and see it has not broken anything. You're going to want to see this thing break over, and then it break below this 45, and then reject off of the 9 when that curls under, much like this right here. If it breaks and then rejects, then you could have gotten out. But see, this thing actually it found the bottom of this range, and then it pushed back up. But you would have noticed that because, of course, this would have been several days prior where this was ranging. You would have known right where the bottom of that was. So you could have easily gotten out. But with this thing, if you pay attention, this is where you can kind of be careful with this, because if you're in this range right here and it curls over and this breaks, just know that it won't flush immediately. It has to now break this new support, because it is in the middle of this range right here. So it's in the middle of this thing. So even if this curls over and dumps, which is going to be a decent drop, if it's 398, this thing can go all the way down to 390. So that's an $8 drop, but it could easily start finding support right here and then curl up and then ride again, and then maybe test the midline and dump, or even push up and then continue up. So just don't go in just because you see it falling. Don't think that, oh, it's going all the way down to 320 or 330. It's now in a new range, and this thing needs to break this new range before it continues down. So if you see a drop and you see it actually breaking and holding below 390 and 380 considerably and going all the way down to 386, then yes, it's no longer in this range, and then it's more than likely just going to continue down over a few days. So that would kind of be my input on that. And then here's more consideration of why you could actually see some downside, because once you actually have this crossover, we had a big drop here, and then you see the 200 moving average, you crossed right here, you rejected here, you rejected slightly, but it's curling up. Now we're at the moving average yet again, and there needs to be considerable momentum for it to continue up. It does continue up. Yeah, we can go all the way to 420. Once it breaks multiple levels, retest this high, and then we'll see where it goes. But there's enough reason to show that it could easily reject right here and then curl over. Here's a couple reasons. One, I mean, we can easily take this channel, move it to the upside, and kind of see that it's right there at the top of the channel. So we've seen that before. Another one, if you see these stochastic crosses right here, you have the downward, and then you have the upward momentum, and you have the cross, and then it comes down. You're not all the way at the top yet. You see how right here at the top, this is like a 90, an 89 and 90 right there at the top of the stochastic, and then it flushes. Right here, your green momentum where your dollar is still right here at 77. So this thing still has plenty of room to climb up just a little bit more before it reaches the true top. So don't get too anxious and get ready to enter those puts. Again, it can still go up to like this 400, 402 level, curl over, and then drop. Any questions on this? I know I've been talking a lot like crazy. I just want to see what else y'all got. Wasted less cash. How often do I do weeklies? In this market, I don't do any swings. I mean, I'll do weeklies on my larger account because it only lets me buy weeklies. So I can't do like, you know, 1 day till expirations or anything like that. But on Webull, it'll let me buy the 1 day. So then that's why I do those. So for stability, yeah, you can buy a weekly and then hold it because the volatility of the option is a lot smaller, meaning that you won't lose your premium nowhere near as fast. So G Money got a Midwest flying like I do. Yeah. Yeah, I'm down in Louisiana. So I mean, if you pick up on that, that's 100% all me. Yeah, see, so you got a nice you got a nice little resistance forming right here. So again, this is what I would do. This is how I chart my stuff out. I just kind of see what it's doing and make these small little levels and then see how it interacts with them. So that would be my best advice. Again, this is just kind of planning ahead for the market, just so you all don't immediately think, oh, we're going to go up or, oh, we're going to go down. We're really at a point where we don't know what direction we're going to go until we actually go there. Even if you look on the hourly, see if we scale down, what we're looking at. We were looking at the 4 hour or the, let's see, on the daily. See, on the daily, it shows we still have some upward momentum, but on the hourly, see, we're already at the top. On the hourly, this is usually, you see where it drops down, which is about an 87. So we're right here. We've dropped when we've come all the way back up. We're at like an 83, 84. So this thing, more than likely, as you've seen in the past, these are like nice little flushes where each point it is hit here, it is curled over, you know, and then if you use the RSI, of course, this is overbought, drop. But this could easily still push up just a little bit more and then curl over and drop. So you just always want to be aware of what it could do. Just because it does something does not, you know, that does not give you any kind of certainty. So my predictions tomorrow is I don't really have any. I'd rather watch what pre-market does because this thing could gap up or gap down. And then I would look at your levels, see where they are, and then see what hard support and resistance it needs to break before a continuation. Like if you're looking on this hourly, you're going to need to break right here at 395, curl over, and then push through to continue down hard. If it needs to continue up, then it's going to have to break past this 401, 402 to get out of that range. So right now it's in this nice little range, and this thing could sit here and chop and consolidate. And we'll make money on that regardless, because these volatility up and down moves is where we make money, because this is like a 401 to a 393. So that's a $7 range that this thing can sit here and chop. And we can make 20, 30, 40 grand off of a $2 move. So you don't have to have huge volatility moves to make a lot of money. All you need to know is where it's going to go and if it goes there fast. Any last questions? Because if not, I'm going to talk about how to make money quick on these 1 day till expirations. And then I'm going to wrap this thing up. Hella clear. All right. Is this recording? Yeah, I'm recording it right now. And I'm going to start dropping these on my YouTube channel. I have a real estate brokerage and I have it, and then I also have my personal, YouTube I just set up like a few months ago, but it was for real estate. But now I'm transitioning it over to more stocks and real estate. And I'll kind of post that stuff to you all a little bit later as I do these. I'll do live trading and then I'll record them and then just drop them in there so y'all can kind of go back. And then I'll also be doing that for educational stuff too. So this way I can kind of break down my things anytime I have a possible explanation for you. Okay, volatility moves. You see this shit right here? This is where you lose money right there in 1 day till expirations. You do not want to get caught up in this. This is just going to burn your premium all day long. The only good moves would have been probably this one right there. That would have been your good move. And simply because this thing dropped down and it had a nice support, I would have got in calls right there. And then you see that volatility up. So that volatility would have shot it from, what is this? 395.4 all the way up to 396.3. So that's like a, what is that? A $2 move? No, that's a $1 move. But that $1 move happened in 1, 2, 3, 4, 5 minutes. That probably would have been like 20 grand I could have made off of like a $20 ODTE. You could have bought like 1,000 contracts of these, bought that call, and then as soon as that shot up, you closed it right out as soon as it hit like a solid resistance. And that's how you could have made money on it. These are what you want to look for. And the way you look for them is because they bounce off of hard support and resistant levels. And then you only know they're hard support and resistance levels based on its prior interaction with it. And the way that you would have known this was a hard one simply was because, see how volatile this is right here? That would have showed you that this is a very strong level that causes reaction. Some call those supply and demand zones. This could have said this is where all the buyers are. I don't give a shit what it's called. I just know that that's where the volatility is. Same thing right there. As soon as it dropped down and hit and I see that it didn't break, guess what? It shot right back up. So that tells me this zone is volatile. So I would have looked out for when this thing came back down, especially if it came back down from a high and then hit it. I would have anticipated a push up, especially if it pinned right here and then it couldn't break within 2 or 3 bars. I would have got calls right here and then rode that up just for a quick, explosion, because this could have rode up, pushed past the high a day and continued up. You didn't know, but I would have been very happy with a nice little move right there. But this chop, all of this is where you lose money. Another good one, actually, if you would have charted this out too, is you see this yellow line. This is actually a daily support and resistance. So I could have, paid attention to any of these and gotten in on these. I can't say, I would have chosen these, but these would have been decent ones to get into a call if you would have seen that they pushed past and then it found support, and then you could have held it longer. That wouldn't be a move that I would get in and say, I'm going to make quick money. That would be a move that I would get in and hold it for like an hour, knowing that this was a strong support resistance, that it was an indecision zone, but it pushed past it, found support. I probably would have loaded up on a lot of calls on a weekly right here and held it with anticipation to swing, because I know that this would say that this would have upward momentum simply because that it did not break below and hold below this support. And then again, once it retested this, that would have been even further confirmation. You could have scaled in even more right there and then held it and then closed out, of course, at the end of the day. Or even if you really wanted to go crazy, you could have held it all the way into tomorrow. So that could have been, some quick examples for you. But as far as these go, yeah, you don't want to enter any ODTE on chop. You want to enter when you see volatility. Like, so when I do a call out on something, I'm going to call out on levels that I think that when it hits and it does not break, that I'm going to get in, it's just like, what is it? Newton's law. You're going to get an equal and opposite reaction. So as hard as it goes up, I'm anticipating it to go hard down in the opposite direction if that level is strong. If it is not strong, and it breaks. That's where you have these momentum days. This is why I lose on days like this, because I anticipate reversals and rejections, and then the bitch just continues upwards. So this is where you have to watch out on momentum days, especially if you get in one and it doesn't break a level that it should and it continues up, then you need to reevaluate and say, okay, well, maybe this is a day that, you know, you ever have those days where you get in and you say, oh, the market should be doing this. It should be going down. It should be going down, but it keeps going up. Same thing. It's simply because that those are momentum days, and it's basically going to go in a momentum that it wants to go in. And that's why they say the trend is your friend. Then once you pay attention to say, oh, well, damn, it rejected here, so it should break through, but it didn't, and it continued up, and then it didn't reject again. Then you say, all right, well, clearly this is a day that the market wants to go up. So you ride the trend. And even though this is where most people probably lost, because they were anticipating a drop down because they saw all of this. So they figured, oh, it's going to win. As soon as it slows down, it's going to curl over and die. And I bet you loaded up on puts every time this thing slowed down, and it kept climbing and it kept climbing. And then you probably lost a ton of money. That's usually how it happens. Happened to me on Friday. Yep. Happened to me too, because I know that my problem is I don't reanalyze. I get and I say, oh, no, I'm right. I'm going to get in and I'm going to ride this bitch down and I'm going to make my money back. And that's where the market beats you on those days. So that's where you need to be aware when you think you know better than the market, because the market's going to do whatever the hell it wants to do. And it is your job to interpret what the market is trying to tell you. So if it's saying that I want to go up, and it's breaking your levels that where it should go down and is continuing to go up, then you need to either sit back and relax and don't trade those levels, or you need to get into a position that you normally wouldn't, and you need to create newer habits that teaches you to go with the trend on those days. I would recommend just to not trade at all, especially if it's too hard or too challenging for you. Just sit back and just watch it and see what it does. But you need to realize that your mindset needs to adjust, and you need to be looking for entries and not thinking, oh, it's going to go down. It's going to go down. It doesn't have to do shit. It doesn't have to do anything that you want. Yes, paper trade, exactly. Sit there and play, or even get into smaller size stuff if you really can't just sit back and watch. So these are your best days for scalps, because you see how this market barely even moved. You know, it sat here and just chopped in this range all day. But this was a good day, because this was this was a $5 range that it just sat there and moved in. You know, you can make a lot of money in that. Same thing if you would have gotten in and you would have realized you could have rode this thing up too, because this was a 93 to 90. Yeah, that was a $6 move. So yeah, that's kind of all I got for you all. I wanted to recap so you get your head right. Cool. All right. Don't you think about money, think about the market. Yeah. If anything too, this is what I look at. I don't look at the money. I look at the move. I do not pay attention to, especially when I'm making money. Like, let's say for instance, if you got right here and you saw a rejection, and then you saw this forming, you say, you know what? I see this nice doji right here. I'm going to go ahead and assume that we got a strong support, and I'm going to load up on calls. If this thing pushed up and I had the mindset of just saying, all right, I'm going to see where it goes, I probably would have taken the call and just closed out, because that little push up, you know, that would have been like a $1.50 push up. I could have made a lot of money on that and I would have closed it. But that's a scalping mindset. But if you wanted to hold it for an hour or two, you could have looked up and you could have been paying attention to the move instead of, oh shit, I'm up $5,000. I need to close this. I need to close this. Instead, you could have looked back and said, all right, it's rejecting. All right, it hasn't broke the 9 moving average. Okay, it pushed up. Okay, we're consolidating. All right, it broke the 9, but it didn't break the 45. It bounced off the 21. All right, we're still moving up. All right, we're still holding the 9. We're holding the 9. All right, we're retesting the 21. All right, we still haven't broke. And then once you see a break, you're like, all right, momentum's probably shifting right here. You can close it out comfortably, or you can even wait for it to retest, and then boom, you could have closed out your move. So you could have comfortably rode this thing from 94 all the way to 96, like a $2, $3 move, watching the move and not watching the money. Because any little indicator, you would have been like, oh man, I just made 10 grand and closed out your position. You ever do that? You close it out and then the stock continues to run. That's exactly why. It's because you're looking at the money and you're not paying attention to the move. So that's what I kind of recommend. Check your bottom labs too, but the candles are the most. Yeah, I mean, this is just what works for me. You all need to figure out what works for you. You know, your different indicators, your different movements, your price levels 1 and 2. I'm just explaining what works best for me, but everybody needs to develop their own style and their own system, because when you do, then you can confidently enter trades and then you can hold them and then you can make a lot more money simply because you're confident in your abilities. So that would be my recommendation to you all. All right, let me see if I can get this stupid chat up one more time. All right, any last questions? If not, I'm going to wrap this thing up. Comments, concerns? Was this helpful? Was this useful? Is this stuff that you all want to see more in the future? Suggestions for future videos? Anything that you got? Yeah, this is recorded. I got this one recording. Cool. All right. Can't wait to check out YouTube. Yeah, I'm going to start dropping more stuff. Any suggestions on things you want to see? Very helpful. Didn't know you was having it. Yeah, I just kind of just randomly decided to do it earlier in the day simply because I will do some live trades. I got a pretty busy week ahead, so I won't be able to yet. But on days that I know I have time, I will definitely do it. Yeah, if you just type in the name Ronnie George, if you type in that, let me see if I can just pull it up. Yeah. Shit. There we go. All right. Again, see, as you see, this is all my real estate stuff. There you go. Sit back, relax. Again, like I said, I own a real estate brokerage. So, I mean, you'll see a bunch of my real estate stuff in here. This was this. But I'm going to start putting a little playlist in there and actually do videos for stocks. So if you all want to subscribe to that, you know, be my guest in any training and stuff like that I do, or live tradings. If you miss it, I will start putting them on the YouTube channel. All right, cool. I appreciate you all. I hope you'll have a good night. And that's it. That's all I got. I'm done.